I have to inform you guys about something very important. I am hedging here and I have huge hedges open on tech and most importantly on silver and the miners. I see short-term correction and then the way up, but this correction can be quite painful. And in this video today, I would explain you how to protect your capital and how not to lose on the severe drawdowns that we might experience. Stay tuned. Good morning, good afternoon, everyone. My name is Russ, and here on Data Dash, as always, every Friday, the macro update from me. Today, quite important video. Honestly, I see a lot of risks in market are building right now. So in today's video, we're gonna go through the newest macro updates through my macro model in order to help us formulate most important asset for the trader, which is the mental capital, and conviction builds this mental capital to help you cast out all the demons that confuse the traders. Moreover, of course, we're gonna go into the charts and see how various asset classes are performing. I'd like to also elaborate, of course, on silver. Today is a very special video. With all that said, let's start. And as you guys have seen already on one of my screens, I am actually getting quite concerned here with the unemployment claim data that came out recently. This is a miss. This is quite a huge miss by more than 10,000 claims, and that actually gives several ways to interpret it. I don't want to be too complicated here and spend too much of your time, but it kind of signifies that economy is not as strong as the government tells us. On the other hand side, it also tells us that Jerome Powell and Fed overall are more and more forced to announce the cut in order to not be blamed for destroying the economy and taking out the jobs of American people. So they would come up with the cut sooner than later. I don't think it's going to happen in August. I think it's going to be most probably in September. And then things can really take multiple points and go in various bifurcation zones from here. We really need to stay vigilant here. On one hand side, we can have those rotation into the small mid caps. We've seen on the last video how Russell 2000 that we've been buying in April already starting to print amazing 3 green candles in a row, printing more than 15% in a matter of 3 days. That's great. That shows us that the breadth of the market is increasing. So that kind of kicks out the latest bulls that were telling us, oh, S&P 500 is only growing due to the Magnificent Seven. On the other hand, it also can be quite a nasty moment because we all know what happens when the yield curve starts to uninvert. This 2 versus 10-year yield that we are having right now in the negative territory, which actually means that investors are getting more money through the short-term bonds, which is obviously counterintuitive. And it happens normally 1 in X, like 8 or 10 years. And we all know what happens afterwards. And government right now is bringing the idea of soft landing, but honestly, soft landing never happened in the history. So what I'm expecting right now, and this is the last remark and then we go into the charts, is that things can also go quite nasty until the year end. And this is the probability for the huge drop that can happen overnight, driven by any of the events, such as geopolitics or also macroeconomics, where S&P 500, NASDAQ can lose 5-6% just intraday, and that would start the process of cascaded sell-off. You need to think, you need to understand the psychology of the market, and you need to think like the portfolio manager who manages 5 billion asset under management, AUM. If you made great returns and you are being paid 20% on the returns you made, what would you do when things start to correct? Would you like to chase another 3% on the bounce, or would you take the profit, package several $100 million that you made this year and come back to your wife and family? I think it's rather the second than the first. So if we start seeing the profit taking across the market, that would become quite a contagious event. That would become quite a domino effect event. So we need to really understand what's gonna trigger that and stay on top of the markets. With all that said, let's have the quick look into my model. We lost a few points here. Everything which has changed, I am highlighting here in green. I see the jobs are not that bad, but at the same time, they are obviously missing the expectation. Also, I am not so sure about a Goldilocks scenario anymore with those kind of job, of course, numbers. And when it comes to the market short term, I see that the weekly direction it's fine. We can have like a short term bounce here, but the monthly direction on Nasdaq is obviously turning negative. I think that today might be green based on the last day's closure. I am always very carefully observing every day. I'm staying on top of the market for the last 15 minutes, which is around 9 p.m. London time or 4 p.m. Eastern time, New York time. Those are very important 15 minutes when I see how markets react and how the portfolio managers are positioning themselves into tomorrow before the market goes into the closure. That's very important. With all that said, let's have a look on the Nasdaq chart first. For everyone watching my streams, you obviously remember what I was telling you last Friday. I said this bearish engulfing candle looks to me that we have topped, and what happened afterwards? Well, afterwards, fair value gap that has been created here. We tapped exactly into this fair value gap, grabbed all the liquidity, and what happened the day after? Guys, you can understand so much just analyzing the psychology via candles. What happened after? Everyone went short on this fair value gap, and we had to swipe those early shorters on the way down. And this is when I started to build my shorts, my hedges to protect my tech stock positions. And of course, my main candidate, if you follow my Telegram alert group, I am sharing all my signals for free for the newsletter subscribers. It's less than $1 a day. Give it a try if you want. I actually gonna link put the link in the description down below. So my trade was Apple. I went quite short on Apple, and I've been adding into the short during the last week. Let's see what my entries are. Those were my entries. Stack looks exuberant, and I start to build my short in Apple between 227 and 240. This is quite accurate, I would say. We tapped all the way to 237, so some of my positions some of my orders have not been filled. But with all that said, I still have almost 300,000 US dollars Apple short, as you can see. And my average entry is around $230. So I'm gonna see how it develops from here and add in the position if needed. I'm also happy to be wrong and to cut it close to break even. That's the reason why I'm teaching you always to DCA into the position. And if you don't remember why, I really recommend to watch my description of one of my favorite books of Dr. Alexander Elder, Trading for a Living, when he explains his famous 3-screen strategy. When you are bringing the analogy of a surfer, having the tide, the wave, and the ripple on top. So I feel that the Apple gonna come into the downtrend. This is an exuberant price right now. I'm not happy neither fundamentally. I'm not happy how Apple management is spending their cash. They're doing the shares buybacks. I'm neither happy about how the chart looks like from the technical perspective. So my overall positioning, I want to catch the down move on that. But of course, I want for the green day to happen in order to build my position on the green day and not to stay in the red for too long, trying to short the intraday bottom that would further on reverse, and that would start feeling not good. This is super important to keep conviction, as I've been just mentioning 5 minutes ago. And one interesting thing about Apple, actually, let's have a look. The history doesn't repeat itself, but it oftentimes rhymes. And looking at the chart of Apple here on the weekly, I see that exactly that period of mid-July last year, accurate to the day, we start having a local temporary bottom on Apple, and then we corrected roughly 16%. So 16% from my current position would be roughly 50K. I'm not against of taking that hedge and basically riding the wave while certain things in the market can correct, and more of that in a second. Right now, as you remember, for those who are watching, we also went long here in a range low, And whatever, depending where you entered, we also had a nice 17-18% on Apple, and then the runners gave us even more, up to 40%. I've been indicating multiple times why Apple is my biggest bet among Magnificent 7 due to the AI bubble not yet affecting that stock, and at the same time company doing a lot of efforts to acquire smaller, I mean multi-billion still, but smaller for the Apple market size companies. And that was done a little bit in stealth mode. So I was expecting market to react exuberantly on those announcements. So I'm not particularly bearish on Apple. I love Apple products, I'm using Apple products, but I'm seeing how the macro is looking right now here, how exuberant those valuations are. So I'm always happy to trade both directions, and that's what I'm inviting you to do, because there's nothing wrong. There's nothing wrong to be a long-term holder, to have your bags allocated, but not lose the capital of any correction down. And those two things can go separately. You can run them in the same account, you can run them in a separate account, but it's also helping you when it comes to your margin, because having the long position and the short position at the same time is actually providing you more cash to be available to do the intraday trades. That's something also quite important. And that's why, for example, I prefer to short Apple via stocks, go short, particularly on the share position, instead of buying put options, because also the thing with the put options, you need to time the market quite well. There is such a thing in put options, which is called time decay. And time decay is one of the Greek letters responsible for that. It's called theta, a Greek letter, and it actually corresponds to how quickly the option would lose their value. And of course, if Apple just consolidates and chops here for a month, then your options, especially if they're short term, can expire worthless. You don't want that. That's why I'm much more comfortable to actually give my portfolio higher access to cash and short it directly through the short position in stocks. Now, let's speak about something much more important in my opinion. As I've joined the channel, it was one of actually reasons for me to share the knowledge I have is about the fundamental play. And that play, as you know guys, was silver and silver miners, and I'm still expecting silver in the area of $48 in a matter of 12-18 months. Nothing changed fundamentally, but I see the short-term risk is building in the metals, and there are several reasons for that. First of all, of course, the DXY, the dollar strength index, has corrected very rapidly, and where we are right now on the charts, we are having those short-term bonds exactly in one of my yellow lines that have been here since at least a couple of years. Nothing has changed, and I think even if the way is more down, we can definitely come and retest this 105 level. So that will be quite dangerous for metals, for risk on assets, but also for crypto. And the reason for that, of course, that strength in euro. I don't know if anyone in the channel, among my viewers, is actually trading Forex. If you do, please let me know in the comment section down below. I observe this asset class a lot, but I do not very often have the time to actually execute the trades because for me, obviously, it's not my favorite risk reward. It's just the bunch of fiat currencies rebalancing between themselves. However, they give me a lot of inputs on how the other markets would behave. And if you remember when everyone was bearish on risk on assets here, I was telling you guys, wait, we are consolidating. I'm seeing this diamond formation here and euro gonna bounce, and it's exactly what happened here. All my videos are here on YouTube. If you don't believe, please go check it yourself. Everything is quite, I guess, accurate from my understanding of how things unfold. So 3% here, and now we are at resistance. So are we gonna break through this resistance immediately? I don't think so. I think we can definitely also correct to the mid-range, maybe try to do another attempt, maybe form this cup and handle here. But those kind of ranges that has been here for almost a year, you know, I'm looking now 2023. So yeah, we swiped this range high, we swiped this range low, but we are still within the range. So it's very important to understand. And that's what, unfortunately, most of the traders are not understanding, that ranging markets are there in majority of cases, in 80%. I've been telling you that a lot of traders actually come through crypto markets, and they come during the bull runs, and that's why they're always seeing the breakouts in the chart. They're breakout traders, and that's unfortunately what formulates so many losing traders in the market because they would expect the breakout to happen naturally. But the breakouts are happening in less than 20% of the time, mostly for whatever market you're going to take. Either it's going to be natural gas, either it's going to be forex markets, either going to be crypto. Most of the time we are in the boring range markets where you don't long resistance, you actually go short in resistance and you go long on support, and this is the healthy behavior that you need to formulate. So when I'm looking on this Euro USD chart, I don't see anything bullish right now. I see that Euro is going to correct, and when Euro is correcting, DXY is going up, and the DXY is going up, metals would go down. So now let's have a look on the gold chart. This is not looking too good. Why so? Because for me, as a trader, as a macro trader, when I see those formation where we are trying to make a breakout attempt, but this breakout attempt is failed, it is quite probable that not just we're gonna correct back in the range, but it's also the probability if we have created so many equal lows that some of those lows would get swiped in order for us to move forward. All the people who went long here, this is exactly where their stop losses are. Look how many days we were consolidating around this range. I can also project here horizontal volume, but you would trust me, all these people, their stop losses are here around 2,270, 2,290. So it's quite probable that gold can actually correct back to those levels. And moreover, I'm not really particularly seeing much bullishness on silver, because gold to silver ratio, which I told you fundamentally we're gonna see at some point in the area of 50 or 60. Let's write it here, 50. I would see this at 50 at some point, but right now we are seeing this bullish market structure break, and yes, we are still retesting the range low. I think we can still start to bounce from here, but right now it does not give a good breather to silver, and silver has been also correcting. Let's look at the silver chart, how far we can go. Actually, guys, nothing has changed here. I've been indicating all those levels, and those are normally the zones where buyers would step in. Those zones are, first of all, around 28, and second, quite bearish, I would say. The lowest I expect silver to correct is 26. But it's also, you see, that's why I'm telling you, very often be careful with all these breakout patterns, because yes, of course, they work more commonly in commodities than in crypto. But still, we see this breakout, we see this retest, and unfortunately, we are starting to close below in this consolidation wave. So how would I know what happens to silver? Let's go on a smaller term time frame. Yesterday, while looking on silver chart, I initially wanted it to not lose 30.2 level. This low here, right? Let's maybe put it on the screen so you understand my logic, and you can also apply it at any given moment. The 30.2, slightly higher. Slightly around this area. I wanted this low not to be lost, but as soon as we lose it, I think 28 is quite common. Now, when it comes to ILJ level versus silver, I think here we are quite good, because also markets start to repricing more value, assuming more value into juniors, into miners overall. So we are quite close here on the daily time frame to break from this range high. So maybe with silver correcting $1 or $2, because market also forward looking, and market knows that the direction from silver from here is more up. This is possible that miners would not correct as much as silver does, because you see from this relative chart, we are kind of close to break through the resistance. And looking at the chart of SILJ, this Amplify ETF for junior silver miners, once again, as you remember, I don't like this ETF particularly because I don't like the companies, the 50 companies which are included there. I think our picks are much better with the companies. They don't dilute their share base, unlike companies like First Majestics and Pan American Silver that are just called juniors on a paper, but they are significantly bigger in multi-billion-dollar valuation. In any case, what I see here failed breakout attempt at around 13.3, and you see this negatively divergent higher high on both RSI and MFI. So I would expect a certain drop down. Once again, if SILJ versus silver breaks out, this drop down might not be high. We can also speak about a few percent here. And what I'm gonna do to protect my portfolio is this 10% downward potential move, because this 10% downward move would also mean hundreds of thousands of dollars for me, and I don't want to take that risk. I am following the strategy of investing meanwhile in the positively correlated ETFs that positively correlate with bearish moves in the junior miners, gold and silver. One of them is JDST, Direction Daily Junior Gold Miners Index Bear to X. That means that's a leverage ETF, so you shouldn't stay there for years, for months, but you can stay there for a week or two. And what I see here, when I look actually on the volume, I see here that the volume has been picking up significantly exactly in the area of this bottoming formation. When I see the huge volume like that, I am also understanding that other market participants, OBV, on balance volume, and looking closer in the candle, I already see the green volume candle, meaning the volume has been at least twice as high. And now, while increasing the volume, I understand that last 2 days, in my opinion, signified the reversal in the ETF. So I'm actually considering a potential spike here, maybe 20%, maybe more. And this is normal. This is how the hedging functions. You are not necessarily obliged to capitalize on unrealized loss, especially if your minor position is in a loss. You are able to add the opposite position. That's what the good traders are sad to cut the losing trade, and the great traders are sad to open the trade in the opposite direction. And that's what we are doing here. The second option to enter is DUST or DUST. It's a very similar ETF. It would copy JDST moves pretty much. I'm also expecting here at least the tap into 50-day moving averages, which is roughly 20% from here. And what's also important, very often my European friends or European viewers are asking me, Russ, I don't have access to this ETF due to the compliance. I cannot open the long position in this ETF because my brokerage account is telling me that the information for this ETF is not available in the native language for your country, whether it's the Netherlands or Germany or France, doesn't matter. So European Union is protecting its investors and not allowing you to access the American ETFs where information is available in English, believing that you don't understand what you're reading. That's all fine. What you can do, you can actually sell one put contract with the shortest expiration of 1 day and get assigned tomorrow. That's something that European users can do. This is very legal. This is not against compliance, because assigning the put option is not the same that buying the share contract. So let's consider it as the way for European users to get access to American ETFs. It does not only apply to this gold and silver particular bear ETFs. It applies to also NASDAQ, S&P 500, Russell 2000, you name it, whatever ETF you would like to actually have for the long term. Once again, these ETFs I don't recommend to hold for too long. When we're gonna be out of correction, we're gonna sell. I'm gonna, of course, post all the alerts in the Telegram group. This is something I'm doing daily. Sometimes we have 20 alerts, sorry if it's too much, but I'm observing actually many asset classes, and I want you to understand all the moves that we're experiencing right now, because right now the market is very, very tricky. And you know why I mentioned it many times. I would not repeat it again, but we are not in 2021 market where you can just buy things and sit on them and do 10x and put the stop loss at the entry and just wait for not being shaken out. Right now things emerge a lot. Fed is really not in control. No one knows what's going on. So it's extremely tricky place where you need to be very vigilant. That's why I believe I'm actually spending a lot of time to give you this guidance. Hopefully you're benefiting from it. With all that said, let's do one last thing in a crypto market. And here I am actually projecting Bitcoin chart because I expect some correction. So there is not yet the time to load heavily on alts. And when the time would come, I would announce it, because I think we're getting closer to catching up a very nice ride on spot on alts. But looking at Bitcoin here, please don't forget, we were in this formation, accumulation, manipulation, and now we're going to have our distribution. So we're going to spike up all the way, in my opinion, at least to 1 Fibonacci 618 on the range, which is bringing us roughly to 80,000, maybe a little bit more. And where to load up? We have two zones here. Let's have a look. First of all, The zone number 1 would be aligned quite well with the CMA gap that has been created over the weekend, and that will be the zone, a range low above 60,300. But at the same time, also everyone and his mom are waiting for that zone. So would it come or not? Well, looking on the hourly chart, I am considering that it actually might be front run. Why? Well, because we are forming this little small range here. This little small range is giving us those two equal lows. And I think the swipe of those two equal lows might be actually enough for the market makers to kick out the late long people from their position. You see, we had this range high. We gave a swipe there. We kicked out all the shorts on the way down. I apologize. I'm going to make the chart much cleaner for now. Let's take everything out. And we normally, when we swipe the range high and we're still ranging, we can break out. And probability that we're going to swipe the range low is also increasing, and the range low here something around 62,500. That's where I would like to actually position half of my position. Let's write it as 62,300, and then the second part around 60,000. I am highly recommending you to do it in the way I do. You can do it on futures, you can do it on Teal Street together with Bybit. The great thing about Bybit that you can both do it on spot and on futures, having your stop loss and take profit in place. I don't know any other exchange that provides you the same functionality on trading spot that it provides on futures. This is for me the big game changer. And on top of that, Binance also stopped allowing the USDT trading pairs. And people are asking me, but what if the regulations of European Union would force Bybit to do the same? Well, for me, this is not a problem because Bybit also have USDC pairs. So you can trade futures and spot on Bybit, on Bitcoin, Ethereum, whatever, on both USDT and USDC and on spot as if that would be futures. So for me, that's the reason why I personally moved all my Binance portfolio to Bybit. I'm not using any other exchanges for now. I would only recommend something I personally use that's like super ethical, super important to me. But good thing about Bybit is that, first of all, they of course give you a very lucrative bonus if you move your portfolio to them. The bonus is following. First of all, of course, for every user, they are giving the nice deposit bonus. If you move, for example, 50K and trade them, it's 5,000. Otherwise, for the small amounts, it's smaller. Maybe there is more precise split somewhere, but roughly the estimates are like that. And when you see trade 100K, don't worry, it's like not actually so much if you have 10,000 portfolio. For me, I reach very often those volumes within an hour or two, just like buying and selling spot, because also in USDC pair there is no fees, so it's much more lucrative actually to trade those spot. And also what's important is that especially for the data dash, they are offering those 500 USDT position airdrop. All you need to do is to deposit at least $100 and claim this 500 USDT trade. I'll gonna keep link in the description down below. Those both things sum up. So of course, if you have a higher amount of money that you want to deposit, or you want to move from other exchanges that don't provide this flexibility and functionality, for example, the integration with Teal Street or ability to set up multiple trades in one click, then of course it's better for you. But also if you have only $100 and just want to build your conviction, is something that I started this video with. Just understand what's your average win rate, how often you're right, how often you're wrong. Just play with $200 or $100. That's okay. Get this 500 USDT trade for free, and you will see basically how the smaller scalps on the intraday give you a higher confidence and conviction on the bigger plays and how to rotate into the market, for example, on your TLT or your large Russell 2000 holdings and so on. Conviction is very important. With all that said, guys, I wish you an amazing weekend. Hug your loved ones, spend some time in the nature. Markets are here 24/7. Don't get burned out. And the great times ahead are coming. I am really seeing multiple alts are giving us very soon this 20-30% bounces. We're going to start positioning quite soon, so stay tuned for the next week. Much love. See you soon.